Good evening, guys. Nightly strategy podcast for June 10th, 2022. While searching for something, I found something else along the way. This is some notes um, that Phil Wu cleaned up for us from a podcast from March 19th that was talking about the path to mastery that was pretty useful. That has information about how we use the experiential learning model of David Kolb to make sure that we are addressing all of the normal processes associated with adult learning that lasts. He describes a certain process that we go through, and how that's also connected to this normal cycle of developing skill mastery that starts off in an area of unconscious incompetence when we don't know how bad we are. And then we become conscious of our incompetence, and then through effortful action, intentional action, we can become consciously competent. And then our challenge is to move that into the realm of unconscious competence, whereby we've internalized excellence and are acting properly without having to think about it intentionally. It describes how we might use the elements of our learning journey documents in order to ensure that we're measuring our progress up the mountain. Talks about the 5 ways of knowing, which we call the walking man. Knowledge of the head, the heart, the gut, the hands, and the feet on this journey up the mountain, and how periodically we come into roundabouts in which we can rest, recover, reconnoiter, reset, refresh, review, revise, rejuvenate, and how those true storytelling circles are built on safety, trust, truth, and which lead to opportunity when we leave the roundabout and are ready to go off on the rest of our journey. And how this process of craft knowledge includes acting as a student and as a craftsman, just trying to make a bowl, and that the craftsman must come over and engage with the new apprentice, and together look at that bowl and learn how to make the bowl, and that the craftsman, to really ascend into guild mastery, if you will, must engage in teaching. Because what happens is you proceed on the first pass around this, where you go from new student to, expert or journeyman, whatever. You begin developing detailed knowledge. It's kind of circumstantial and context related based on what you've specifically been doing. And you lose some of that beginner's mind because you are adding depth in your knowledge. Well, when you try to teach someone and you tell them about what you see, they're on the other side of this thing trying to apprehend the bowl. And it may not make sense. And it's not until you actually come back over to where they are and look at the bowl with them through their eyes that you can convert your expert knowledge into first principles knowledge. Simple, plain English that says exactly what you mean in ways that cannot be misunderstood. And then together you create and transmit that knowledge and exchange knowledge. It is an essential part of your own learning as a craftsman to periodically come back and adopt that beginner's mind so that you reconnect with those first principles, with those underlying deep-seated values. And it is only through trying to teach it can you reconnect with it. Otherwise, you can become victim of your own specialized knowledge and get caught in the expert trap. So the act of teaching not only is a public service and good community practice, but it is also selfishly the way that you re-engineer and reintegrate those things that you know, and learn them at a deeper and fundamental level. So you essentially continue to circumnavigate the bowl as you ascend the mountain in a spiral fashion. So that's the emphasis on each one teach one, the coaching models that we use, the idea of accountability partners, and learning to look through a coach's eye. So all that is discussed a little further in that podcast. I wanted to share that with you. So this turns out to be a really important artifact. On the left-hand side, it talks about our trading process and the standard questions that we ask about every trade before we trade. Specifically, what do you see? What could it do? Both directions. Which way would you want to trade? What's your gut telling you? And frame it in both directions. And where would you enter? What would be the price that persuades you that the hypothesis has failed? Would you stop and reverse? If your initial trade is a win, you say, how far could it go before I would normally expect it to start to stall? At what point in the life cycle of the successful trade am I more concerned about preserving the gains that I have than remaining exposed to potential gains? Where does it become the tipping point into protecting my gains more important? When it hits my resistance, would I stop and reverse, and why? And I have to reframe it in that direction too. And if I get out, whether I stopped and reverse or not, and then it reverses back into my direction, where would it re-enter? Oh, sorry about that.
Picture of a law-abiding American citizen. He's a 72-year-old retired business school
Why
professor.
is that
He's got a PhD in economics from Harvard University. His most recent job was extremely white-collar. He served as the White House trade advisor in the last...
My phone just sprung to life, and I don't know why. All right, so if you think about what we're doing with the sniper trading, this is the standard frame of reference, essentially, that we're using. What we're talking about is that circumstances prior, to when we're stalking, this is the moment of decision, and we're stalking and framing. This is the present time, that vertical blue line. There is some set of conditions that have generated a signal that says this is a tradable moment. In other words, we have a trade frame that is favorable. In our most current language, we would say this is a critical state in which the size of our minimum manageable risk box is small compared to the potential gains in either direction, and that the probability of that move in either direction is more likely now than normal, and the size of the move is larger than normal, and the size of the move is large compared to the amount of risk that I have to take initially. And because of fractal framing, what we do is something like, let's think of this as a core and turbo. The turbo intraday trade, maybe that's the intraday trade there from yesterday's doji, but it could be any trading range, really. We're looking for ways in which we can risk a minimum manageable risk box and have 2 to 1 or better up to the next logical resistance. In this case, yesterday's high of the day. But that could be any trading range, really. and that we know what to do if our stop is hit. It probably gives us a collapsing dragon. And then we also know that if it breaks through that resistance, that there's another set of gains to the upside. And so we're framing those second and third order effects and looking at different levels of support and resistance. And we're looking at these as different legs. And we would expect to experience that kind of a move if the higher time frames get on board our momentum and continue to carry this thing all the way back up to the to that profit target. And in the same way, because it's in a critical state on multiple time frames, the downside move is there. So whatever that signal generator is, that combination of locations and volatility, it has created conditions in which an initial move and then large follow-on moves are possible in either direction, and all we've got to do is be flexible enough to be able to respond to price whichever way it goes, and then be ready to harvest positions or add to positions based on our read of the standard trade frame and support and resistance. How we get into that critical state is varied. It could have been a continuation trade where we had an SSC that worked, and then maybe this is the pause that refreshes, and maybe that's the kata 2, and then it breaks out and continues. Or it could have been leg 1 of a collapsing dragon that has paused temporarily, and then the next leg down continues when the support level is broken. So it could be a kata 2 or another CD on the way down. It could have been abnormally sideways quiet channels in the form of a Z3P or a super pinch that has been so unusually quiet and sideways that the breakout from that range is what triggers the potential for new momentum to carry the trade abnormally large. So this is the frame of reference that we bring to the idea of critical state trading. And when we're looking at the sniper frames and the sniper setups, we are looking at compounded critical states. That we're looking for critical states from multiple time frames based on location, either extremely near the top or the bottom, or exactly in the middle with a large move ready in either direction. So we're looking at 3 different time frames, looking for our target to be in a critical state by location in all 3 time frames is best. We get the compounded effect of multiple demographics of traders that are ready to respond abnormally strongly if those trade frames begin to unfold. Our entries are hit and so forth. We're looking for multiple groups of traders to come in and add to that initial momentum or to react sharply against it to get the big moves. And then we combine that location, we compound that with the short-term volatility, the 5-day volatility stats and the 1-day volatility stats, which give us the potential for abnormal emotion to be attached to the abnormal location. And when you combine rational analysis and emotional sensitivity and you get a compounded critical state, that's the kinds of targets that we're looking for to give us a larger than normal probability of larger than normal moves in either direction in short periods of time. That is the essence of critical state trading, of sniper trading. And all of that is a response to answering these questions and then using our indicators and trade frames to let us know when we have a candidate that is in a critical state. So we're going to see some of that today. So yesterday we talked about the symbol peak. This thing was at the bottom of all 3 of its trade time frames and had abnormal volatility, and we were ready for a big breakdown should that occur. So we're on 5-minute charts, intraday, simplified trade framing, and what we get is Here's our just a 25-cent standard risk box. Here's the opening. And we get from yesterday's close, we get a big gap down. And I'm looking at this trade structure right here. I'm noticing lower highs and sort of a low of the day. And when I get this breakdown, I take the entry because I notice that the dragon is down. We have a big gap down. The whole market has gapped down. And it just made a new low of the day 15 or 20 minutes into the day. So what might we call that entry? What kind of an entry does that feel like? I would probably call it a collapsing dragon because I was waiting to see it break below that support level right there. But I could also, if I was looking at this as a crossing of the dragon, I could see how you might look at that as a SSC as well. But in my mind, I was treating this as a collapsing dragon because of the daily setup. I knew that if that thing collapsed below yesterday's low, which it did on the gap down, it was already making new 1-day, 10-day, 30-day, 150-day lows while the market was melting. This felt like a low-risk move altogether. It's much more important to be sure that you know how you're thinking about it as a pattern as opposed to being 100% technically correct, because as we just showed, people of good faith and goodwill could have a disagreement on what that is. It's more important that you go through the process of saying, I'm looking for the pattern, looking to name it, I know how I trade that pattern, and then be truthful and responsive to that pattern. That's more important, that process and that commitment, than getting the exact name right, if we're going to be honest here. Okay. All right, it's now 15 minutes into the trade. This would not be a bad place to just lock in that. You could live with that idea. Check or hold. And now it's a science project. And you might have gotten out there. If you got out there, you would have had a no lose plus dinner for two. And then on this breakdown, you'd have gotten short again with a standard risk box. Because it rejected the dragon, is making lower highs, and it just broke below either here or below there. So you could either take either one of those red lines as an entry and be fully legit, and then use the top of the dragon as your execution. So I've already limited my risk to about a 0.4 on this one. Check or hold. So I'm trying to manage that initial risk, and I'm just trying to get well started and not cause any harm. And you don't hear me saying I'm convinced about this one at all. It's more important to manage the risk than it is to have a firm belief in that it's going to work. Like, if it's going to work, it doesn't need me to make it work. It's just going to work. Now, my actual trade this morning was this one. That one didn't kick me out, and I took that trade and made a fraction. So peak did not collapse wildly. It seemed like most of the pain and suffering happened yesterday and then was built into the big gap down. So that was not much of a sell-off at all. And now I'm looking at this and I said, well, I've already invested emotionally into understanding what this thing is doing. What might I call this move? You know, I consider this one to be about an SSC right here. I consider this one might have been the formal SSC, right? Because if I'm doing that, I'm waiting this on this second yellow dot. I've waited for the PSAR to be hit. If I'm trading, if I'm taking this one, I'm adopting a 1, 2, 3 entry. I'm front running the actual pattern. On the other hand, I'm limiting my risk to about the width of the dragon. I wouldn't do that until you got 1,000 trades in hand. So I considered both of these. I did not take them because there was something else going on with this thing. Like, I don't know that it's ready to have a great recovery. The rest of the market is getting smashed. But it didn't collapse like I thought it would, so I was a little reluctant to get on board this one at either one of these earliest possible re-entries. But I did take this one. And part of it was, the reason for taking the second or that third entry now was that I noticed this and then this. And I noticed that the dragon is rolling up. So and then I noticed that we were very close to the high of the day, and it had taken out this level. So given those factors, what might I call that entry? I thought of it as an owl because of the upward slope of the dragon, and if the RL30 was there, you'd see it. I could live with an emerging dragon because it's breaking out above this hump of the that 3-period moving average. My actual thought on it was that it was a Kata 2 because what was significant to me about this was that I had the observed low and a nice move, successful, a pullback that didn't even break the spine of the dragon and started to resume and then took this out. So I really thought of this as a combination of a Kata 2 plus an emerging dragon, and that felt wise, and so that's why I thought it was sort of a wise owl. But again, what I'm going to do on this one is I'm going to take great care, and I'm going to put my execution stop here at the belly of the dragon, and so I'm not going to take a full 1R loss on this one if this starts to fail. I would be getting out at this part right here, which is about 0.5, which is very close to a collapsing dragon. The official collapsing dragon would be if it violates the bottom of this bottom of the dragon here, or breaks down below the PSAR. So any one of those, technically, I would take as a collapsing dragon. But I viewed this one really as a Kata 2 and an emerging dragon. So let's see what we get. Is that making sense to you? So by this time, I feel pretty good. You could, by this time, just go ahead and lock in a gain like that, and then decide what you're going to do. I like the fact that it's rolling up. It's starting to decay a little bit. So if you decided that you really wanted to preserve more, you might put your stop there. I wanted to give it more room to run. So I would move in to lock in just the smallest level of reward. No matter what, it's still a science project. Let's get this guy out of the way. Now we're at a key price level here where this is the high of the day right here, and we're getting ready to run up. And I like the fact that the dragon, upper skin of the dragon, is supporting. So if I wanted to preserve more, I might even do something like this now and just say, you know what? If this thing is going to work, it should really work now. So if it doesn't work, then it's not going to work. And now I want to lock in that much gain. So I might actually do something like this now. Instead of, this was the no lose plus dinner for two. And then this is where I might lock in even more on that gain, because that's going to give me about 0.5. So to me, those are the two significant choices. I either want to keep a wide stop as a science project like there, or I want to lock in more of that move here. A lot of that's going to have to do with time of day and market condition, what else is going on. But those look like two reasonable choices to me. Check or hold. Notice that we're still in really early days of this trade. Like the PSAR has only gotten this high so far. So the opening bars of a trade, when we're with the PSAR with our setting, the PSAR gives it room to breathe and room to work. But in a bearish normal market, you might want to adopt these principles here that get your risk out and maybe start locking in more pieces of your trade. Choices that you got to make. So now either one of those is still good to go. Now this is one where I notice, we had the nice push up from here, right? And then it opens where it closed, made another nice little run up, but then couldn't hold that and actually comes down and is now lower than its opening and lower on a closing basis to the previous one. So this is one where, based on market conditions and your objectives, your money management strategy, you might just go ahead and take that exit right here and lock in this move, which is going to be better than 1R. There's absolutely nothing wrong with that. Or you could elect to, give it just that little bit of extra wiggle room and lock in that piece. Your choice. I mean, the good news is that we're at, new highs of the day, and this thing is working in our favor, so we kind of like that. The P-star is still playing catch up. It's still not even above our entry yet. So this is early days in the trade. And where I ended up taking my exit this morning was this one, because I wanted to lock in. I had decided I wanted to lock in that much. And that's essentially a 1, 2, 3 exit. I did not let it come through the dragon. I was content on the long side to be making this money on a symbol that I thought had a propensity to crash and burn. And here I was, trading it on the long side, and that felt pretty good. Now this thing could not break out higher than this, and now I notice this entry. So there's my standard risk box. Here's where I'm taking like from the top of the MA3. That feels like that's our proxy for the RL10. So I put my execution. I could put my execution stop there. I actually put mine at the top of the dragon, because this thing has not had wild breakout moves. This thing is kind of grinding. So I'm really risking about 0.4. And then what would we call this? What could we call this entry? I'm looking at him as a kata too. I could also see, a CD. Oops. I could also see a CD over here. God dang it, Kenneth. I could see a CD in the sense that it is, violating this low right here. And I really I could see it as a SSC or an SFC, because it had it had this strong upward move, and then has now reversed and crossed the dragon and hit the PSAR. So I might think of that, and the way I thought of that one was as an SSC. If I go back to yesterday and looked at its support and resistance, then this would be a kata 2, because I could see the hump of the dragon right here, and then somewhere back over here there'd be a hump of the dragon, and this looks like it's reconnecting to that strong downward move, and then I would expect it to come down to here, and on that basis I could call it a K2. But in either case, again, it's more important that you get that entry and that you manage your risk. And in this case, I'm using the top of the dragon as my strict risk box, my execution risk right here. Even though this is my risk box 1.0, right? Check or hold. Finally, starting to fail a little bit. By about this time, I should have my stop like right about here. And then I would have locked in, something like this, about that much. And that's where I took my exit as it was crossing the dragon. So there just wasn't much going on with this one. It did not give me the collapse that I had anticipated. But again, I'm just trying to make haste slowly. Right? That's all I'm trying to do. I'm just trying to make haste slowly. And just trying to grind it out. Just trying to grind out that work. Don't lose money. Take measured steps. Take what the market will give you. Check or hold. Here's a Tesla. Probably going to grind on this one, I'm guessing. I look at that one as a Kata 2. Yesterday's price was lower than this, so I knew that there was some price level over here yesterday, which now gives me a Kata 2 to the upside, and I'm thinking that's going to be my move. So I've got my standard, in this case, about a $7 risk box. My half risk box is that blue. I think this morning I thought of it actually as an SSC. In retrospect, I could see it as a Kata 2 also. And we'll just notice that I take my entry here. My standard risk box of $7 is down here, but I put my stop at my execution stop at the bottom of the dragon, so that's about a 0.7. Get my entry. I hung my little half risk box on there. By the time this gets out and closes here, it's out of the blue box. So I just go ahead and move my stop from here and run it up to here. And then I notice, this thing opened here, ran all the way up, and then started to sell off. I put the blue box, the half risk box on it. And again, that's a guide. That's not a hard and fast rule, but the guide was, hey, I've given back half an hour, so I ended up splitting the difference between the plus half and the minus half and split the difference, and was happy to take that trade right from the get-go for about maybe 0.6, check or hold. These things add up. Know what your average risk, your average win is, and when you should be thinking about locking in gains. Now I'm glad I exited. Now I'm looking at this, belly of the dragon over here, which was my execution stop before. That was the price that was going to tell me on my first trade for sure that the upside was not there. And if it violates now, what am I looking at? What's the pattern that I'm looking at now? CD. Sure enough. Collapsing dragon, anyone? Everybody clear on that one? Grinding, anyone? Does this feel like a grinding kind of a morning already? Yeah. So that's about a 0.3. It's all right. I know how to grind. That's what work feels like. That's why we call it work. So I get like a 1, 2, 3 entry, probably an SSC. I certainly don't believe in this trade. I know that it's really got to clear, that price level to really be considered, something special, right? So I get my entry. I drop my 1.0 box on there. I decide this is where my execution risk is going to be, about halfway down the stack. Check or hold. And then if it fails through that red line, what am I going to do? I'm going to be all kinds of short on that one. And then if it breaks above this blue box, that's my little note to self. Hey, start figuring out how to get my risk to no lose plus dinner for two, something in there. No, not second position. I'm not thinking about a second position until it gets above this, above that line up there. The blue box is only half an R in hand. This is where I haven't even gotten to no lose plus dinner for two yet. But if this thing breaks out of the blue box, if this price gets out of the blue box, then my job is to get this risk up to about here so that I can get to no lose plus dinner for two. That's my first job. Don't think about second positions till you got 1,000 skilled trades in hand. Nothing. So it didn't follow through. It pulled back, came back through my entry, so I'm out of this thing. It did not immediately work, so I just take a 0.1 loss. Moving on. Check or hold. Grinding. Tesla, no follow through today so far. Cliff Natural Resources. The metals got absolutely smashed yesterday. So here's the open at the blue line. I notice the big gap down, monkeys around, and now breaks down below the belly of the dragon. So what might I call that? And here's my standard risk, 25 cents. Yeah, CD. Here's my standard, here is my standard 1.0 risk box. I'm only taking about a 0.3 because I'm using the top of the dragon as my execution exit. Check or hold. I'm much more concerned about not taking more than a 1 hour loss in the early stages. Because I felt the emotional loss of 1 hour when I put the trade on. Now I've taken some of my risk. Now I've got this. Am I going to lose money on this trade? I am not. So just go right there. Standard work. Devon Energy. Critical state yesterday. Market opens at the blue line. Rejects the dragon and starts to fail. I feel like that's my execution stop. Feels like a CD to me. I would give you credit for a COTA 2. Because of, you see this, and then you see this rejection, and then it crosses the dragon. I would take COTA 2 as the trade structure right there. Am I going to lose money on that trade? Nope. Lock it in. Good dog. Lock it in. About 10 or 15 minutes later, this thing, just by continuing to march this thing down, ended up exiting at 73. So here's a symbol. We got short at about 75.50 on about a 50-cent risk, and it returned that much. $2.50 on 50-cent risk is about a 5-hour trade. So Devon Energy was the one that worked. So that's what they look like when they work. That's what they're supposed to do. I don't believe they're going to do that. I just know that they might do that and that they should do that. And that if they don't do that, then I don't like them. So I don't stick around. Like on that Tesla move, it did not work for me. Get out. Do something else. There's an infinite number of opportunities. But you don't have infinite cash, time, and patience. And if you're believing in them, then you're putting those things at risk. Make it prove itself right away. ARE, this was that real estate one that we looked at yesterday and we said was still poised to crash. That's the one we got 8R on yesterday, and it had closed poorly, and it was still oversold on the 10-day, 30-day, 150-day, and the volatility made it very vulnerable. So, of course, I'm interested in that thing. There's where it closed. You can see the dragon is declining. Big gap down. Rolls over. Breaks the previous bar's low. I'm short with a standard risk right there. Feels like CD. Am I going to lose money on that trade? Nope. Science project. End of science project. Time for the book report. So I'm just going to lock that in. And nothing. Okay, so sniper trades of the day. Lots of grinding today. That's normal. But the one constant between all of these is that lens, which says I have some kind of critical state right here in the middle that is postured for either a big failure or a big gain. When it comes out of there. If that's a daily box, then I'm looking to trade inside the box if I can see 2-to-1. But then if it breaks out of the box, I might be using that whole box to look at multiples of moves up to 10-day highs or 10-day lows or whatever. But the essential idea is that this critical state has compressed to this location for a very measurable breakout in either direction. And it's a compounded critical state because of locations, which is your rational analytical mind, and because of abnormal volatility, which is your emotional mind. The combination of those two things gives us critical states. So everything that we just saw in the sniper trades of the day today were all symbols that were in compounded critical states from yesterday, which is why they're on my list. They have a propensity to move. Check or hold. Do we believe in the trades? No. Are we going to stick around? No. Should it work right away? Yes. Am I going to get my risk out of there as quickly and reasonably as possible? Yes. I'm always going to name the pattern that I saw in the moment, and it's more important to do that and then go forward with conviction and routine action than to be 100% technically correct. Okay. So yesterday closed here, and we said, oh man, when it breaks through that little PSAR dot, this thing is really vulnerable. And we said, you know what? This thing could come down and test the PSAR and the RL10 and could break through the belly of the dragon. And today, it gapped down from the close to the open and then sold off, unsurprisingly, to a new 10-day low. Look at the size of the 5-day volatility box and the 1-day volatility box. We're now almost 19% off the top, and we are challenging that previous support level. That's as bad as it can be. And just a couple days ago, we were talking smack about the possibility of this being a big, the next base of a breakout to the upside. We were talking about getting to the 30-day high and back to the, long-term fair value in the Z3. Were we wrong? No, we were not wrong, because we weren't predicting it. We were simply mapping out a possibility of what the upside move could have been. But at the same time, you also heard us saying, hey, this downside move is equally likely out of the critical state that was formed inside this yellow zone. So big moves in either direction are more likely. That makes it a critical state. And what we got in the last 2 days was critical state move back, to the downside. Yeah, that's what we want. And it's testing this move over here. And so if it breaks down below here, what's that move going to be next week on a swing trade basis? You are correct. Big time collapsing dragon on a swing basis happening here. Yeah. Bad news. Could it rebound from here? Could it do this? Sure, it already has. So now what we have is another critical state down here, ready for big moves either direction. Either one of those is possible. That's what makes it enjoyable in bear markets, because you're getting these, you don't get much meandering around. That's what made the last 5 days so so tough to take was what is it going to do in here? What's going on? Why isn't it just going? It decided, well, down. This guy's not willing to take risk over the weekend. All right, sectors. Here's the S&P was down 2.9%. The only index that was worse were the Qs at minus 3.5. The Russell and the Dow were only down 2.7, 2.6. Emerging markets down 1.1. Treasuries only down 0.6. Sectors that were better: wood, the other lumber, Simon Property Group 2.5. Real estate 2.2. Energy and oil exploration 1.7. Oil, blended commodities, the Aussie dollar, agriculture between minus 1 and 0.7. Staples 0.4. Here was the cutoff line to those that were actually in the green. Lithium, VIX, marijuana, wheat and precious metals 4.3. Rivian and U.S. Steel and Robinhood were the only individual targets that were better than the S&P, and they all got smashed too. So tough day at work there. Things that were worse than the S&P. Brazil, materials, blockchain minus 3. Bitcoin, Mexico, clean energy, the FANGs, finance and tech 3.8. Discretionary, global future of finance 4.4. Blended large cap crypto 4.5. Biotech 4.6. Ethereum, genomics, innovation, BOCT 7.5, and then Coinbase 7.9. All the other financial disruptors, Squarespace and PayPal minus 6 and minus 5.7. We talked about PayPal earlier this week when it was at 88. I said you wanted to don't let it get below 82, but didn't have much choice because the gap just got slaughtered. And that person is probably now converting themselves into a long-term buy and holder and changed their rationale because they can't let go of a position that they believe in. That's the problem with belief. It costs you money. Devon Energy and Cliff 4.8. Alcoa 4.6. Microsoft 4.5. Apple 3.8. Tesla down 3%. Closed below the key price level of 696. They are going to do a 3-for-1 stock split at some point. Anything to change the narrative and make it seem more affordable, I guess. Weekend report review. So what's the first thing that I look at on every daily report and every weekend report? What's the first thing that I'm looking at? Market classification, which combines location and volatility, and then trade location over multiple time frames. So I'm instantly looking to see if the market itself is in a critical state. I use the risk Z to help me understand where are the likely turning points in volatility. There's one. This thing is signaling it could get worse in a hurry. ETF2 doesn't care. Its market exposure drops from 10% of capital exposed to 0%. Says, what's the big deal? Monthly market check. This little doji voted to the downside and is now down to the Bollinger Band mean. Yikes. It's putting, this was the COVID move below the Bollinger Band mean. And then here it went above the Bollinger Band mean and stayed above the Bollinger Band mean until now. That's how significant this sell-off, which was here, up around Z plus 2. And that's how far away it was from the Bollinger Band mean. And now we're down at the Bollinger Band mean. That's the start of the time of troubles. Because if it breaks through there, it could get down to here in a hurry. The 9-day rolled over and just collapsed at Z1 and has come down to Z2 and beyond. And all it's got to do is get below here, and it's look out below. It's already at the previous Z3. Weekly, this was a grind up, slam down. Support here, ready to get violated. Target to the upside, Bollinger Band mean would make a lot of people happy, but that's a long haul to get from here to there. It wasn't so bad at the start of the week to get to there, optimism, but now from down here, oof, that's not optimism, that's a pipe dream. 3-day, you can see how the indecision was rejected in favor of pain and suffering. Key support level. And we've seen the daily already. The power of the 4-month moving average is a guide. You could do a lot worse. Even the outstanding Latin America slaughtered. All the internationals murdered. When the best thing by far, which is energy, had a negative week, that tells you something. Yeah, Brazil could not survive. Australia took a hit. Oy. Commodities. Agriculture. Only Chevron showing any kind of joy. This is all energy. All the equities getting murdered. The only thing working, commodities and oil. Ugh. Tradables based on ATR percentage for short term. The Qs. Tech and semis. Discretionary oil and gas, biotech, Brazil, gold miners. Learn how to grind. Learn how to work and suffer. That's a 0.5. That's almost a 0.5. That's a minus 0.1. So that's 0.9 on Tesla. If that's what, sometimes you go to work and that's what's there. Oof. Not surprisingly, all of the auto framers are firing now. Special cases. We talked about Disney. If it failed, it was down 3.5. IBM, Walgreens, all 5 DDs. The failure trade on that is massively good. ETFs also. Oil, materials and energy and oil. The only thing showing any love. Unsurprising, so I'm not going to read all those to you. There's some 9.7 to 1, 8 to 1s. There's some names we love in there. Cliff, Alcoa, Brazil. Easy to find targets if you look. Lots of Godzillas in the S&P, sorted by explosive volatility. Here's the ones that are exceptionally strong or exceptionally volatile already. And these are all below average. These are Godzillas lurking, ready to come out and crush. Those are our new favorites, or recent ones. Peak, Regulon, ARE, Billington, Intel. Devon Energy is still microwave popcorn and ready to rock. It was a nice trader today. These are the ones that are sitting right in the middle of those long-term trading ranges and are all quietly waiting to fail big time. Colgate-Palmolive has already started to fail based on that one-day Z-score, as is Allgem and Visa. This rollover has put everything at risk now. You can see the ones that are already starting to fail early, the ones that have dipped into the winter. How quickly the good news changes to sadness and only gold. Yeah, so we found out which way that tension was going to resolve. Oh, there it is. Solve that problem. So this suggests that the run-up is done when it got up to the Bollinger Band mean after crossing over at 2 sigma out there. It made a 2 sigma move from here to there. And now all bets are off. And at a critical state, ready to collapse. Rejected. Now notice that 2 days ago, that 10-period Z-score slope was really high. That is the least surprising thing to happen when it comes out of those moves, is that kind of sharp sell-off. So the fact that it did not follow through further was a warning to us of this coming. Just got to learn to read that indicator. All right, let's look at trades. Couple from my brother. Piece our flip. 1, 2, 3. Comes out of the dragon. He's short with a wrist box there. Starts to roll up. 4.6. Walmart was in a critical state. We saw that yesterday. It was a 5DD and it collapsed. Home Depot, same pattern. His rules. That's a reinforcing. Could have been a second position. Failure to fail further. Starts to roll up. Could have been 10 if he adds a second position. This would have been 10R. PSAR flip, he gets this entry, takes the quick exit probably in here. This is where the short was available. And unless you already had that built in, that happened in a couple seconds and you wouldn't catch it. The rebound rolls over. It cannot penetrate the dragon, doesn't get to the critical state here. So when it rolls over, that's really an entry short. So make that red so we can see that that's short. And then it rolls to here and comes up into here. He takes the exit here. Could have taken the re-entry short here. You wouldn't have lost money on the trade. Comes over to here. Gets short again when it rejects the PSAR. Comes back up, so he scratches, scratch. PSAR flip. This is over trading. And there should be one entry in here. Here, exit, and then this short here, which gets paid. Gave way back too much. Got paid. Good work. Stay out the river. Hit your re-entry. This was really good technique right here, though. After 50 trades, stabilizing positive expectancy here. Nothing worse than 1R, and this is getting better. Here's where close, and this is getting better. 2 to 1 or 3 to that's 4 to 5 on the win rate, and 3 to 2. So that's 12 to 10. So that's positive expectancy. That's good. We're getting there. Starting to feel it. 50 trades. That's pretty good. All right, if that's the start of the trade. If that's not the start of the trade, this is where you can get short. Another one short there, so that was potential. This is about as on this move. That's really reasonable. That's a good got paid. That's good. It doesn't even get to the P, so it rolls over. I think you can get short here, but that's still pretty good. I think we gave back too much on this. This one was an open, ran back up and came back down. Little bottoming doji hammer. And then it opened and then rolled back up. As soon as that takes out this, I think I want to get out here. And that will actually start improving this already. I like the patience, especially after this madness. I think you can get, yeah, that's about where you can get short. There wasn't much there. Good patience to stay out of the chop. And then on this one, I think I like this as a caught a 2. So there just wasn't much in there. You got what was basically available. That's about the only place we could make any improvements. So that's pretty good. All right, Jack working on Tesla. I think you got the same trade I did. The breakdown comes through the dragon. Good short. Gave back way too much here. This should be out right here on the 3s because you have this. And if you hung that blue box down, or half that blue box here, you'd end up getting that trade instead of this trade. This would have been tempting to get long then, and you would not have lost money on that trade. You might have captured a little bit. This is a great short. Now, this is the pattern we're looking for. This is such a collapsing dragon from here, but also in here. So a normal collapsing dragon is down and then looks like this, and then you draw that red line like this. And then if it breaks through there, bang, then you get it. So what happens if it doesn't even make that much of a move up? What happens if it just does this and then starts to fail immediately? The absence of the upward move means that there's even fewer buyers and a lot more sellers. So you want that. That's an even stronger downward move. And so now if we look at this, see, it couldn't even make a nice big upward roll. It just bumped over. So there's your second position. And then this is where we should be getting out. This is where we should be getting long. But good scratch, good fractional, good short. I thought this was pretty good, being able to capture that. The re-entry to me might have been in here, except you're not trading. So that's 2.8, pretty good work. Pretty good. Devon Energy for the win. Violates, there's your collapsing, or a K2 or a SSC. That, again, this RL30 didn't even hook up. It just immediately rolled over again after a pause. Great second position. Got paid, re-entered. Gave back probably too much. You want to be like out right here. And then this entry should be here. And then that'll be paid. I'd have been tempted to get short in here and would have taken a loss. And then I would have gotten long here and gotten paid. This is a great short. It was a little unlucky. Probably should have scratched. This is a great re-entry. Great reversal. Yeah, you expect a bounce right after the violation of the VWAP, but if it doesn't materialize more than that, you could just get out, and that way your second position is not causing you to give back too much of your first position, which was brave, right? So nice work. 8.5 plus 2.5, 2.8 on the other one. That's about 11.3 for the day. Pretty good stuff. Luke for 5.5. Good scratch, got paid. Maybe want to be here instead of here. Entry should be here, not here. And so we should get a little fraction on that. Maybe 0.4 improvement between the two of them. Pretty good Kata 2 recovery. I think you got a scratch. Good re-entry. You got what was there. Good scratch. Keep firing. Bang. Gave back too much. I want you to get out here. When you get those dragon horns, dude, right here, then this becomes your short. Scratch. Scratch. Gets paid. Gets paid. Gets paid. Last 50 trades. So that's 3-2. And 3.5 to 1. So that's like 11-2. He's being ruthless. Nice work. Production level. Good week, good day. Better job getting paid on the long ones. Still too much chop. Look, every one of these is a loss because we're trying too hard. Pay attention. Fake 1, go 2, collapsing dragon. Yeah, this was the one that was too hard. But I like the idea of staying out of the chop if it doesn't feel right. But you got in. Here's the second position. And then gave back too much. We should be down here. You love that chop. I could understand one in here, but not those two. Just put a bracket on those and wait for it to break. Now, let's see, the Aussie dollar here. Here's what I'm going to tell you to do to make this easier to see is you got all your price compressed in this tiny little piece in here, and it's very hard to see what's going on. You think these are tiny little moves that don't matter, but they do matter. And if you expanded your scale so that you could see some price differentiation in the bars, it would be easier to see the reversals. This feels like it should have been short right about here instead of here. And then this would pay, and then here's a 1, 2, 3 entry or exit. So you should be getting paid on this one to here instead of losing. Here's your PSAR flip. It feels like you're supposed to be long here and probably scratched. And then that would be a re-entry. And we should be getting paid on those instead of losing fractions. Let's make a fraction. Learn to make a fraction. That short is probably should be done about here. I wouldn't even take that trade because you got the Z3 pinch. Wait for it to break out of the yellow like this did, and then that probably worked. Yeah, and then gave back way too much. riding the Z3 rails. It opens. It couldn't make a new high and started to roll over. I'm out there. Instead of giving back all of this, which was most of the gain. So you end up only capturing this little piece, and you give back that much. You gave back 2/3 of that trade. Bottoms out. I think I'd probably want to be out here instead of here. You're in the yellow. See how expand your scale so you can see this more easily. And then shrink the size of these so that you get more room dedicated to price action. Eddie. PSAR flip. Waited for confirmation, I suppose. I can live with that. PSAR flip. I think I want to get out here and probably re-enter here. I'd probably scratch and re-enter and scratch. So you got more out of it, I think I would have. Although that's probably, you probably got most of it right there. PSAR flip might have been short here. Probably would have given back a fraction, then re-entered. Really tight stops. Nice work, bud. There's 3, 2.5, minus 1.2, so about 4. Well, I think I already saw this one with Paul. I think we saw that one from my brother too. All right, that's everything we got for today. Tomorrow night, swing trades. Sunday, the Creativity 202 course starts Sunday morning and Monday evening. For those of you in the sound of my voice that are in that course, we'll see you then. And that's everything we got.